Good morning, traders. It is Friday, October the 11th. Taking a look at the charts, we got some pretty wild price action going on. I mentioned this yesterday in pre-market that something fishy was going on. The markets were moving in a weird way and not really relating to each other. Everything was kind of random, and we started to get some a breakout today, and we got some wild whipsaw action in currencies and metals. So we're letting the market kind of do its thing. We're trying to get a read on it. And if we take a look at the SP 500 daily chart here, you can see today we got a nice pop. Equities, major indexes are all up a percent. Russell 2000, 1.3. Looks like there's talks. There's Brexit stuff going on. We've got trade talks and a lot of different stuff kind of really moving in pre-market, and it's causing all the markets to really move, and the currencies are moving as well. If I was to just pull up a currency chart, they won't really all fit in here unless I can squish this down a bit. If you take a look at the currencies, the dollar, two big down days in a row. We're seeing the euro have a nice pop. We look at the pound, huge 2-day rally in the pound. And so we're seeing in the Canadian dollar, big spike up and moving back down this morning. So there's a lot of big shuffling going on in currencies. That's probably related to Brexit and the trade talks going on. So that's going to really affect the market today in commodities. So today we're seeing actually a breakout in stocks to the upside. Our analysis is still red, meaning the momentum and trend is still down. It is breaking out to the upside, but it could be short-lived. We haven't really flipped to the upside yet, and price is narrowing in a range that opportunities just starts to get smaller and smaller. You look at this range, you get these recent highs, you can see where we're trading today is beyond more or less the halfway point through this pattern. So it's going to be grinding up into resistance here and into this resistance. There's the upside around the 3,000 and change mark still, but overall it's squished into here. And if we look at the price action on our little cycle analysis here, you can see here we got the short term. The yellow line is our short term, kind of like a swing trade style, and then we got this green line in the background, which is momentum. Both of those today are in the topping phase, and we'll see if sellers step back in. Today looks like a lot of it is based on news, so a lot of news-based moves are given back. So this strong move in the morning could be whipsawed, and we could close back down in this range. Could be a reversal bar, and we could see it come all the way back down to the lower end over here. You never know how the day is going to shake out, and when we get mixed markets like we did yesterday, where things just don't make sense, being in cash is the safe play to be in, and we're letting the market do its thing until we find a new setup. Now, if we go and take a look over at, let's take a look at bonds. Bonds are down. Bonds moved down yesterday, ended up gapping below our stop, and we closed out that position to reduce any downside play there. We don't want to turn a winning trade into a losing trade. We got out half the position at the top, the rest at the open yesterday, and more or less we're letting it do its thing. Now, overall, bonds are still in an uptrend, but they are selling off, and we don't want to hold it. And if it's going to keep selling off, we'd rather re-enter potentially at a lower price or just later in general, even if it's at a higher price, when the trend and the bias is showing signs that it's going to put in a bottom. Now, if we take a look at the short-term analysis with our cycles here, you can see here we've gone from a red trend. We got long, we ended up getting out, I think it was right over here on this day. We took some partial profits, it hit our target, and then it sold off yesterday, came down, got oversold yesterday. Lime green zone means we are into, the bars are trading in here, it's hard to see, but overall, it did get oversold yesterday. Our cycle is trying to bottom out, more or less today it should bottom out. And then it shows we should have some type of a cycle pop to the upside. So we'll see. Today the market bonds set to gap lower. And today, more or less, this session could be a wild one, but then we might see a relief oversold bounce back up potentially on Monday or Tuesday next week. So that's just these are very short-term cycles. This is one day. This big pop here would be the following session. So we'll see how things unfold over the next couple hours here today, and maybe we get back into bonds at a lower price today in anticipation of the pop and that it is oversold and still within an uptrend. But if we look at the daily chart of bonds, you can see there's been some really big price action. This huge rally in August, sharp sell-off giving back almost all the gains again. And then we had another strong rally, and now we got a strong pullback again. So bonds are really volatile, and they're actually are moving a lot faster than they normally have in the past. So got to be cautious that there's some pretty good volatility here, and volatility means more risk. And we don't want to be catching one of these huge extended drawdowns where it could just continue to keep collapsing in price. So we'll keep our eyes peeled. We may stick our toe in the water for another bond play, but you can see here our cycles here are oversold as of this morning, our short-term momentum. So it could lose some, start to reverse here and find support into this previous consolidation and start a bounce. If we look over at metals, gold was down over 1% this morning. It is recovering a bit, but overall gold continues. Gold, silver, and miners are all the same. They are still all making these lower highs, lower lows, channeling to the downside. Started to roll over there yesterday, picking up speed today. And for all we know, this could continue for as long as the market needs to. Could be weeks, could be months. We could start to eventually trade sideways and build a kind of a resistance area here. We don't know how long the market will correct. We played this move. We played using UGLD, a 3 times gold fund. We did about 22 or 24% there, and we got out. And now we're letting the market do its thing, and we're looking for the next setup. And the question is, are we going to get long gold? We're going to get long silver or miners? We'll figure it out when the charts all start to match, that they're all showing upward momentum into the upside. We'll figure out if we get into gold or silver miners or the bullion, the ETF themselves. We'll figure that out. But overall, the market is consolidating. Still looks really bullish, but it's in consolidation mode, and rather sit in cash than hold on through this. And you never know what could happen. You don't want to just sit in something when it's trendless, because if it loses value, you're really just throwing money out the window. You can get back in later when it's showing signs of growth. Looking at natural gas continues to push down to some new multi-month lows, I guess, or yeah, multi-month lows at this point. This morning, a little bit of a bounce up, but again, it's still trying to put in some type of bottom here. It's still weeks away, really, from it's putting in one of these right now. This is what I feel as though it's going in. I think it is trying to carve a bottom out here. Overall, we're starting to get a cluster of cycles all coming into a low. When you get a cycle cluster, that means a lot of cycles are bottoming at the same time. We could see the market move up. We've seen that happen kind of over in this area here, where we had really, it was kind of somewhere over here. This pink and green and yellow all got down below this green oversold level, this bottoming cycle, and then we saw the market bounce. So we are almost there. The pink cycle, which is our intermediate cycle, isn't quite down there yet. Over a little bit of time, maybe we get into that, and we could see another nice momentum position swing to the upside. Maybe we try sticking our toe in a little earlier versus getting in over here and getting out over here. We may try getting in somewhere into this little platform and put in a really tight stop. We'll see how things shake out going forward, how much risk we want to take on a play like that. Looking over at crude, up 1% this morning. Crude's actually got an interesting setup. It has a bearish bias. It's stuck under all the key moving averages, stuck under several of these blue horizontal lines, which are long-term resistance areas. When you're under them, they're resistance. Overall, the bias feels still fairly bearish. And if we look at the cycle analysis of crude, let's just zoom out here. You can see we've gone from green bars, which means we are pulling back within an uptrend, and then it pulled back far enough that the momentum, everything shifted. We've gone red, and now it is forming what looks to be a bear flag. Let's just draw on the chart real quick here. I'll zoom in a little bit, zoom out a bit. You can see what's going on here in terms of the market sold off, consolidated with a bear flag, sold off for the second half of that move, consolidated with a bear flag, has sold off. This bear flag is much larger. This is something that could be, this entire move could be this bear flag move, and then we see that continued huge move to the downside to the $44 per barrel level, which we've talked about in the videos for the last week or so. So that's the big question. Prices drifting up, and if you look at the cycle today, tomorrow, or the following session, Monday, we do have the cycles topping for crude, and so it is forming this bear flag. It's had a big pop up. Look at it on the day chart today. It ran up really big in overnight trading, selling back down. So went all the way up to 44.80. So it came all the way up to this area, which is close to this 20-day moving average. This is the 20-day moving average turning red here. It's kind of a messy chart, lots of red, but overall, it's pushed up near this level, and it looks like it's starting to reverse and could potentially be an exhaustion gap to the upside, and it fades out and eventually sells off to the downside. So it's kind of interesting to maybe stick our toe in the water and try to get an inverse ETF for a move back down into the support zone. Target one would be somewhere down here. We want to quickly lock in some gains, move our stop to break even, and then if it breaks down, then it should be an amazing downward swing, potentially for a big, 10-15% move to the downside or more. Anyways, that is it for this morning, and I'll talk to you in a little bit. Bye-bye.